Mr. Chaudhry, thank you very much for your time here on CNBC-TV18. Glad to have you here at the Global Fintech Fest. So let me start with some of the comments that you've made about fintechs in the past, taking away some of the juiciest parts of the business. Now that RBI has come out with some regulations that sort of put guardrails around how the industry is going to grow, do you still think there's headroom for them to take some of your customers away, take away some of your profit pool?
So, when you talk about the regulations can act as a moat only for a short period of time. End of the day, if fintechs come with the right innovation, the right product, the right customer journey, I think they can continue to take customers away from the banks. And if you're not, we don't react or are not proactive about it. So in my mind, a couple of changes have happened post some of the regulations that have come in. I think the fintechs have had to rethink their model a little bit. I think they have realized that regulation is not a bug, but is actually a feature which they want to have in their operating model, and a very critical feature. So they have to put compliance with regulations fair and center of how they go about building their business models. And I think that realization has dawned very quickly, and a lot of fintechs are repivoting their model. But there are large fintechs out there who are providing services to customers, who are interacting on their platforms on a very large scale.
Yeah.
So from a bank's perspective, the reaction to whatever is happening is, I would say, twofold. One is you first continue to innovate yourself and ensure that you continue to attract customers directly.
Yeah.
And second is that you work in partnership with all these fintechs because they are attracting a customers of a certain kind who are using a certain service. In many cases, a bank can come in and supplement and complement what those platforms are doing. And that's precisely what, say, a bank like us is attempting to do.
Is there no threat at all from fintechs? I ask because, the RBI, for instance, in the past has said banks completely miss the payments bus. And that is one part of BFSI that has gone away to fintechs. Are there other parts that they're chipping away at? Is your moat enough, like you said? Probably not.
No, so when you look at the value proposition of any service being provided to a customer, if a fintech does become large in terms of what kind of customers they can attract and what they can do for them, the commercials do change. So if a fintech is large enough, can get the right customers to any institution,
sure,
and say that I can kind of stand behind the customers to some extent, they will demand higher commercials. So yes, rather than taking the customers away, they could take the juicier parts of the commercials away. So it's not that it is just about the customers, it is also about what the commercials are. And typically when in a customer journey, if let's say a fintech or let's say a bank is providing the services covering a certain part of the journey, it will be our attempt and their attempt to keep providing bigger and bigger parts of the journey as we go along. Now in the process, at some stage it could come under regulatory ambit and they might be comfortable embracing it. In some cases they might not want to embrace a regulatory ambit and they might stay out of it. But I would say fintechs are our partners, fintechs are competition, and in some cases fintechs will be strategic relationships and all will coexist.
Let's broaden the pool a little bit because, public sector banks that have been saddled with bad loans are coming back stronger with cleaner balance sheets. You have larger private entities being created, your former HDFC Bank merger. You have Jio coming onto the scene. Aside from fintechs, who's the biggest competition for Axis Bank at the moment?
See, all our competition, and the competition is evolving as you rightly pointed out, that public sector banks are coming back, fintechs are becoming more important and prominent, Jio Financial Services are talking about making a big play in the market. The good news is that Indian opportunity is very large, it is only growing. The fact that all of us are here and so many people are here, they see India as a place where a lot of innovation, a lot of growth can happen in a short period of time. And I think it's a question of how you play on that opportunity rather than all the time worrying about, I have a certain scale and how do I protect myself. I think you should be thinking about how can you grow in this platform which is going to get created for India in a very, very big way in the years to come. So yes, competition is welcome. Competition will always be there. It will always, new competition will keep coming. It's a question of how we react to it. I mean, at least in case of Axis Bank, we are seeing this as an opportunity, and that's exactly how we're going about it.
In a scenario where inflation is high and RBI may continue to hold rates for a while, what will that mean in terms of your margins and growth outlook?
So the repricing of deposits is still in play. It's not that the repricing of all the deposits has happened, which means that the net interest margins will remain under pressure for a little bit of time. Obviously, every institution realizes that and is trying to ensure using a combination of what kind of asset classes you're pushing, what kind of yields you want to push, is there a play on the cost of funds in some form or shape to manage and maintain the margins wherever they are. We have been quite clear with the market that initially when we talked about increasing our net margins, we had said that 3.8% is where we want to get to. We went way beyond it. We touched 4.2. Last quarter we were the shade below 4.1. And we have said that we'll continue to strive very hard to remain in that zone of as long as possible. Now, as you rightly pointed out, the expectation is that the interest rates will remain steady from here on because RBI does want to bring the inflation down to 4%, which means that if and when the interest rates are cut, because then again the loans will reprice faster than deposits, you would see net interest margins coming under pressure. So I think that is some distance away. But in the interim, as pricing of deposits completes, I think the margins will remain under pressure and then hopefully stabilize till the again the interest rate cuts start.
At 22%, your advances growth has been strong in the last quarter, but deposit growth has been lagging, and that's a problem that the industry is also facing. I wanted to understand going ahead, if this gap continues to widen, won't it affect your ability to disburse credit? How do you see that remaining sustainable?
Well, it impact the ability of the entire industry to continue to.
Let's talk about
credit.
Axis Bank.
Yeah, so in that sense, yes, at some stage, the deposit growth does need to catch up with the credit growth. Otherwise, we will struggle to, continue to grow advances at a certain pace. As you again rightly pointed out, that the growth on the CASA side has been slow. I think what you will see is a lot of banks are doing very well in terms of growing their term deposits. We have also seen similar trends. While our overall term deposits number might not look that big, but when you dive deeper into some of those numbers, you will see that our individual term deposits are growing very healthily, about 25%. And so, the lack of growth on the CASA side is being compensated for by growing your term deposits. But yes, I cannot take away the fact that if deposits growth remain muted, at some stage credit growth will get back.
Mr. Chaudhry, to quickly also touch upon your latest deal that's been in the news. You've announced an additional 6% stake in Max at a price of 113 rupees per share. How do you justify the price, and how do you think the regulator will look at it, given that currently Max is trading at, say, 890 or so a share, and a large part of that business is the insurance part of the business? So do you think there's a bit of a regulatory overhang there?
No, so I think when the regulator revised the guidelines, it made it very clear that the methodology for determining the share price has to be on the
fair pricing formula.
We have followed exactly the same formula. There was a transaction which happened in Max where Mitsui moved from Max Life to Max Financial Services, where a similar formula was used. They, at that time, had done the transaction at somewhere in the mid-80s. So it is not that we are using some different formula. We are following the guidelines issued by the regulator, and we are following the guidelines to the T. Now, again, this is all subject to approval from Reserve Bank of India and IRDA, and we will go through that process. Our view is that, firstly, a transaction of this nature has happened in the past, and we obviously continue to follow the same guideline in doing this transaction.
And, yet we've had the insurance regulator questioning Max, seeking certain clarifications of the deal. We also had SEBI recently, seek these clarifications. Has SEBI reached out to you on the matter yet?
See, when the initial questions were raised on the transaction itself, and I'm talking about
the last transaction.
At that time, as part of the inter-regulatory governance, I think IRDA had informed SEBI and RBI about the questions they had raised and some of the discussions they've had with Max and Axis Bank. I think it's part of the same thing. There's nothing new has happened which I'm aware of. So the regulators do talk to each other, and as part of that transaction, they were talking to the other regulators and sharing with each other what exactly the nature of the transaction was and how it has panned out. And I think this latest article or this news item which has come around SEBI is just related to that, nothing beyond that.
But, SEBI is in the last leg of its investigation as far as your first transaction was concerned. And, it's estimated...
I'm not aware of anything of that nature, so when SEBI reaches out to us, we'll let you know.
Well, compared to the 32 rupees per share price then and 113 rupees per share price now, it is estimated that shareholder loss could be 1,800 crores or so. How do you think this would play out in the regulator's eye?
First, please understand that all these transactions are done with the permission of all the other shareholders. We are not going and doing something in isolation. The other shareholders of Max Life approve this transaction, only then something like this goes through. So it is not that it is done at the cost of someone without their knowing about it. It is all done with agreement of everyone else. And as I said, We have just announced the fact that we intend to do this transaction. We still have to go through the approval process. Let the approvals come through when we then will actually do the transaction.
All right. You know, the Citi deal, that's another one that you've now finally been able to close. Has it played out the way you anticipated? What are the synergies you've seen since the 1st of March when the integration was completed?
Well, it has played out exactly the way we thought it will.
Despite Citi losing a lot of customers in the process.
No, that is all media. See, again, please let's understand. When Citi started talking about this transaction in the first place, that was in March 2021. Then they came to the market with the deal in June, July 2021. The transaction was consummated on March 1st, 2023.
Yeah.
Now, during that process,
yeah.
Citibank might have lost some clients.
Yeah.
And it is obvious that when you do something of this nature, you will not only lose some clients, you'll lose some employees also.
No
and that
doubt.
has happened.
No doubt.
In our structure with Citi, the transaction which we had kind of signed up with them, we had mitigated the risk of something like this happening, and you did see that the overall value which you paid to Citi did come down because they had lost a certain set of customers,
yeah.
which is beyond the framework which is set up.
Agreed upon.
Post the acquisition,
yeah.
both on the employee and the customer side, I don't know where media is getting its numbers from because we are not disclosing any numbers. We are just saying that the 97% of Citi employees came to us. The attrition rate is lower than what they saw in the 2 years before the acquisition, and the customer retention has been extremely high and as per our expectations. So we are very happy with where we stand today with Citi. We had talked about more than 60 plus synergy potential benefits.
Yeah.
All are in play. The synergy benefits are coming through, and hopefully it will continue to reflect in results of Access over a period of time. Please understand that there is still an important milestone which is left. We need to shift from Citi systems to Access systems sometime next year. And when that happens, hopefully more synergy benefits will come too, because right now we are paying a pretty decent sum to Citi to maintain the systems on which the Citi customers are transacting.
Well, on that note, Mr. Chaudhry, thank you very much for your time here on CNBC-TV18. Always a pleasure speaking with you.
Thank you. Thank you so much.